Good afternoon, everybody. Today is Monday, the 29th of August, 2011, and this is Brian Shannon from Alpha Trends. Let's take a look at this market here. The S&P 500 did break out of that triangle that we were looking at, and of course we saw last week that the market had pulled back and had a little bit of a shakeout down to the lower ascending trend line here as it got back up above that 5-day moving average on Friday. That's where the market really took off from, and of course today we had the gap higher and continuation right up through the end of the day. Now, the funny thing was early on, I had mentioned that I thought it looked like this market was being pulled, kind of gravitating towards the daily R2 level. R2 I had identified at 121.44, and the high today was actually 121.43. So, kind of a strange coincidence that it came right up to that level. But again, it does show the value of looking at these levels and understanding that there are people that trade off these levels, and they, like a lot of technical analysis, tend to be a self-fulfilling prophecy at times. So we're back to the high end of the range that we had identified as well, and right now the question remains: is the market going to kind of enter this horizontal box basically, or are we going to be able to break out and continue to move higher from here? Now, we do still have a declining 20 and 50-day moving average. We have a declining 100 and 200-day moving average. So the odds would suggest at some point this rally does fail. But now if we can push past here and maybe make a run for that 50-day moving average and that prior resistance, that this is maybe the bigger level that we're gravitating towards, up near 126.5, which is a 5-point rally from here. So still very worthwhile, obviously. Now, not all the setups that we're looking at in this market are ideal because the trends are sending us different messages across different time frames, but there's still opportunities out there. Like we were talking about over on Friday, was the market going to be able to follow the lead of stocks? Like, not that these are leading stocks, but these are just a couple of stocks that I had mentioned that had broken past the resistance. That was Electronic Arts, and then I also mentioned HealthSpring, and these two stocks are continuing to move higher. Now, again, the question for the overall market is, will this market be able to kind of do what those two stocks and a lot of other ones have done and be able to continue to move higher? It's really nobody knows, of course, and we've had a decent little rally here the last couple days from 114 to 121. So a 7-point rally off the lows 2 days ago makes me think that we're getting extended into a prior level of resistance, and perhaps we're going to see this market slow down. So ease off the throttle a little bit here. I think it would make sense that we've broken past this important level at about 119, and if the market maybe could pull back down towards 119 and then push through that 121.5 area, then I think it would be a more tradable type of move here. But again, it's we could continue to move higher, so it shows the value, as always, of keeping an open mind and being able to be nimble in this type of environment. It remains very volatile. By the way, on Mondays, this video is brought to you by Realtick, and the charts that you see here that I always reference are Realtick, and they have, of course, those pivot lines that are drawn in if you choose to put them on there, and you can see how easy it is to draw in trend lines, support, resistance, Fibonacci, and all that sort of thing. If you want a copy of the charts that I have here, basically, that is, if you have Realtick. If you don't have Realtick, go to realtick.com and get a free trial to it. But if you do have Realtick and you'd like a copy of the page that I use for this, in other words, this chart that has these little tabs up here that make it very easy for me to go from one time frame to another. If you'd like a copy of that, send an email to this address right here, bshannon@gmail.com, and over the next couple days I will send those out. It's not an email I check every day. So, but if you do just send an email that says Realtic in it, basically nothing elaborate, I'll just turn that around and get it out to you. Let's take a look back at this market though. The Nasdaq up nicely today as well, and this market is trying to push past this level. We've got basically a new recovery high in these markets. That is, since the lows were made in early August, we do have a new high here for this month, and basically post recovery, post washout, whatever way you want to identify that. And we look at it right in here. We're breaking past those highs. We're above this prior level of support. So we want to see, in the case of the Nasdaq, that the 54 level will hopefully hold as some support. It's easy to look at this market and say, well, look how low the volume was on the Nasdaq, and in the S&P 500, look how low that volume is. And again, I'm going to remind everyone that you can't take volume to the bank. And someone pointed that out to me on Twitter. I don't remember who it was, but you can't take volume to the bank. You can only take price. Only price pays. Go to www.onlypricepays.com. It's one of the best sites there is for technical analysis. Anyways, back to the Nasdaq. It was much lighter volume than what we've been seeing lately, but that's not a reason to sell this market short. It's not a reason to be bearish. It's not a reason to sell. We obviously broke above that trend line. We were talking about the possibility that this was a descending triangle. Well, we gapped up above it, and the market continued to rally. So now we're up at these highs, and we want to see basically about 54 hold as the near-term level of support. For the Russell 2000, up 4.7% today. So we're getting really big percentage moves in the Russell 2000. Compared to the rest of the market. Although the Nasdaq and the S&P were up close to 3% today, 4.7% is a big move. Again, it was lighter volume in here as well, but you look at the price action, and we're seeing that we're getting to the here's the next potential level of resistance, basically right at about $73 a share. That's these little highs from I guess August 5th or whatever this day is here, August 5th, late that afternoon. But what we want to see for the Russell 2000 is we want to see a pattern of higher highs and higher lows. Today it was gap up, consolidate a little bit, and then bounce from the volume weighted average price, ran right through the daily R2 level, and just really continued strong. So it would be better to see this market pull back a little bit, make a higher low, and then try to push for that 73 level. But the momentum is obviously higher, and you've got to again remain nimble. The semiconductors did catch up a little bit today. They were up 3.2%. But this is the group that we've been talking about that has been kind of lagging in here, and they are trying to, well, they've gotten back to this prior and up through this prior important level that we were looking at about the $29.10 level. So we had seen prior resistance turning into support there, and we were able to push through it today. So now I think we would want to see support hold down near about 28.90 to 29. If it was able to do that, make a higher low, and then be able to push higher, we've got this 5-day moving average rising. Then the semiconductors look like maybe they're going to make a push for $30 or so. But the daily charts, they're still damaged. We still have a lot of reason to be cautious. It's easy to look back and say, oh wow, I knew that was the bottom, or just that hindsight habit that a lot of people tend to get involved in when we have a market that's this volatile. These financials did make it beyond the top end of that recent, or up to the top end of this recent little range here. We've been calling it 1320, so I guess really we got above it at $13.30 closing. But you can see we're right at the top end of what has been. We've visited this area a couple times over the last few weeks, and those MACD divergences were actually pretty good. If we go back and take a look at what we were talking about a week and a half ago, where these markets made a lower low and the MACD was actually making a higher low in all but the S&P 500. But in here again, we'd like to see maybe a pullback towards 1290, 13, and then be able to push higher still. But the market, maybe we make a run for the 50-day moving averages. Generally, those rallies up to and through the 50-day moving averages do not hold when the 50-day moving average is declining. But right now, the short-term momentum's higher, and that's what pays us. So that's what we need to pay attention to. And thanks for tuning in. That'll do it for now.